We introduced gap continuation and reverse E-mini S&P last week. I want to go over the 5 changes to this strategy. Oftentimes I get questioned about how often do I optimize, is your strategy curve fitted, and so I want to show you why these changes are not part of optimization or curve fitting. So there were 5 main updates to this strategy, 2 order execution updates, 3 feature updates. And the first one is the order execution update, which is a limit band check. I made a detailed video on my YouTube channel, and I'm going to show you where you can find that because I'm not going to go over that again. It's a detailed method for determining when to split the order and change the order from a limit order to a market order depending on if the market is above or below your limit price. You can find that on my YouTube channel. Currently it's the second video. You can always search my YouTube channel right here. Click on this search button and you'll be able to look up TradeStation 10 Easy Language Lesson on Managing Limit Order Band Rejects from the Exchange. And so that is one change. It does not change the actual strategy rules. Here is the second order execution update. It changes the rules slightly. The back test doesn't change much. I don't like to enter longs again at higher prices or shorts again at lower prices. This checks that to make sure that does not happen. This also makes sure that we don't re-enter an order, exit, reorder on the same bar. I don't like to exit and re-enter on the same bar for a second trade or third trade on the day and get in at higher and higher prices for longs, lower and lower prices for shorts. And so this slows it down a little bit. Does not change the back test much. And I'm going to go over the results for that in a minute. At the end of this video, while I'm telling you this, before I go over the 3 feature updates, I want to invite you to the webinar next Wednesday, January 27th, 3 o'clock, when the market closes, 4 o'clock Eastern Standard Time. I'm going to go over this strategy and 9 other strategies in the portfolio and why portfolio trading is better. Go over some portfolio design techniques. So the link for this is in the bio, the description on the video. You can also learn more about gap continuation in the link in the description on this video. So I want to be fully comprehensive video on what is going on here and how this strategy works. It's a strategy to catch V reversals, short covering rallies in the market. We've seen a lot of these since 2016, and the 3 feature updates beyond the 2 order execution updates are the AGR Input, MaxDailyEntries, and Max Loss Limit. The AGR Input is true by default because that's how the strategy was designed. It includes both of these. We talked about splitting the original order into 2 to check for the price in relation to the limit order, and so you have to include both of these orders to be true to the original strategy. If you set this to false, then it only takes the first order, place the limit if the limit order is above, if the price is below, the limit order is above the market. So basically it's tricky to word that. So if your price is up here and the limit order is below it, then you will take that trade. So as the market moves down, you can take that limit order. You won't place the order if the price is below your original limit order. So it removes that second order in that setup. The other 2 features that were added are set to false by default, so they're not used. They can be used on your side as a custom setup. One thing you need to be aware of is if you change the strategy, it can change the portfolio that you're trading. So make sure you understand that. If you shut a strategy off for the month, it might make your strategy, your whole portfolio worse because it's not there to trade anymore, and so your other strategies are profitable. Maybe this one's not profitable, so you turn it off after a certain amount of loss, while the rest of the month the other strategies start to lose while this one does really well. So you have to think about how your strategies work in relation to one another and not be too anxious to micromanage each strategy if you're trading a portfolio of strategies. So once again, 3 feature updates, 2 order execution updates. None of the default features actually change the original strategy. This doesn't change it. This changes it a little bit, and I'm going to go over that now. I'm going to show you the performance summary before and after all of these changes. So here is the latest performance summary. 63,450 total net profit, 54.25 drawdown, 140 average trade profit. This is inclusive of slippage and commission. There's $25 round turn slippage and commission, so that would be about 165. And you see the equity curve here. I'm going to go back to the original strategy so you can see the difference and address the question of optimization. So here's the back test difference between the two. The total net profit is different. The new version is 63,887 versus 63,450. So there are 48 trade differences. There's 501 more trades versus 453, and so the average trade profit is $13 less. This is with slippage and commission as well. This number is 62.28 instead of 63.13, and this is all through January the 15th. The max drawdown is 57.25 instead of 54.25. This number is 11.15 instead of 11.69. So very, very similar backtest results to February. And so you can see the results here, and the setups with the new rules are not much different, but it takes into account order execution, takes into account not re-entering at higher and higher prices for longs and lower prices for shorts. Mean reversion type market that we are in, we don't want to do that. So that's the update, and hope this addresses the question of optimization and how strategies are changed, updated. Sometimes we change the parameters, but this update does not include a parameter optimization type update.